You are watching Market Watch, the brief overview of the key events from the world of finance. The US dollar remains under pressure, hovering near multi-year lows against the euro and pound. The drop is driven by expectations of faster Fed rate cuts and political uncertainty surrounding the future of its leadership. Growing speculation about Jerome Powell's early replacement has raised concerns over the central bank's independence. Traders are now pricing in a more dovish policy path, nearly 64 basis points of rate cuts expected this year. As a result, risk-sensitive currencies and emerging market assets are gaining strength. Boosted by Wall Street's momentum and fading geopolitical tensions, Asian stock indices have hit multi-year highs. Japan's Nikkei crossed the 40,000 mark for the first time in 5 months. Optimism has been further fueled by news of progress in U.S.-China trade talks, including faster rare earth shipments. European futures are also trading higher, while the weakening dollar, losing its safe haven appeal, is drawing capital into equities. With markets now anticipating a Fed rate cut as early as September, investor interest in stocks is on the rise. Markets are fixated on the potential leadership change at the Federal. Reports that President Trump may announce Powell's successor ahead of schedule have sparked talk of a shadow chair undermining the incumbent. This scenario alarms investors, as it casts doubt on the Fed's autonomy, a key pressure point for the dollar. Weak U.S. data and rising bets on deeper rate cuts are further clouding the picture. Confidence in the Fed's ability to maintain a stable and predictable policy stance is increasingly being questioned. Gold prices are falling for the second straight week, weighed down by the stabilizing situation in the Middle East. Investors are now focused on upcoming U.S. inflation data, which may shift expectations. Despite the decline, analysts highlight capital rotation into other metals, as platinum and palladium see gains. Gold remains vulnerable at current levels. Markets are highly sensitive to changes in Fed outlook, and the lack of clear signals ahead of the July meeting only adds to volatility. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.